This is Andrew Stotz of Stotz Investment Research looking at Korea Equity FVMR Snapshot. Remember that FVMR stands for Fundamentals, Valuation, Momentum, and Risk. First thing we want to look at is the ROE. What we can see in the world, ROE is about 12.6, and in Korea it's about 10.6. So the profitability of Korean companies is pretty low. In fact, look at the number of companies that have ROEs below 10%. 1, 2, 3, 4, 5, 6, 7. We can say that it is a low ROE country for sure. The highest ROE is in the consumer staples right here and the infotech. Now, let's take a look at the next thing, which is dividend payout ratio. We can also say that this is a very low dividend payout ratio country at about 17.5 versus 40%. So half the dividend payout ratio. Now, sometimes we look at Korea and we look at the big groupings and think that there's a corporate governance issue. And I think that this is one way that we can look at it, is that one of the reasons why we like high dividend payout ratios is because it forces the corporates to give out their cash rather than continuing to reinvest it. And really, why would you want to have a company reinvesting almost 80% of their profits at a low rate of 10%? Pay it out. Okay, let's go and look at the PE of the Korean market. And what we're going to see is that the PE is, geez, my goodness, it's almost half. Now, I've written before about this Korea discount, and there's many different reasons for it. So this is not, I wouldn't say that you want to rush into this market because it's super cheap. Now, what we can also see is that price to book is now about 1 times price to book versus the world at about 2 times. So again, half the valuation. Always see that Korea has this very big discount. Why? Well, one of the reasons is this very low ROE. Also, if we look at the market, what we can see is that analysts are forecasting 32% earnings growth. But my dissertation that I did for my PhD looked at the performance of financial analysts in the stock market as far as their forecast. And Korea tended to be the one that had the highest amount of optimism in their earnings forecast. So you may be looking at earnings, instead of coming in at 32, they may be coming in more at about 10 or 15% for Korea. So if we look at some of the areas where there are some interesting growth in earnings, I want to look for where there's sustained growth in earnings. And here we have 2 years of 40+% earnings growth. I'm not so interested in some of the areas such as really high and then low, because this tends to be a turnaround, such as industrials. So healthcare looks like an interesting sector, except, oh my goodness, I got to pay 40 times for that in a market that's trading on 10 times. That's pretty rough. It's a tough market. Now, if we look at the price game, we can see that the Korean market has gone up by about 18% versus about 12% or so for the overall world in the last 12 months. And we can see that, well, good news is Korea's got low gearing, so that's good. But what we can see is that's probably depressing the ROE here, right? They've got a lot of equity on their balance sheets compared to the rest of the world. We could compare their ROA and try to understand the difference. I use ROA in my world-class benchmarking. So maybe that ROE is not so bad, but why do they need so much equity? Now, the last thing we can look at is the volatility in price, and what we can see is the high volatility sectors. Well, here we have the energy sector, high volatility, and we can say the healthcare sector, high volatility. Wow, that's interesting. Low ROE, high PE, but fast growth, lots of volatility. And let's look at our lowest volatility sector, and we can see that that is industrials. That's the lowest volatility. Anyways, overall, Korea discount remains, with the Korean market earning an ROE on a very low amount of leverage of 10%, paying out a tiny amount, only 20% of profits as dividends, and trading on a PE of about 9 times and a price to book of about 1 times. Analysts are expecting about 32% growth in 2017, but they tend to be very optimistic in Korea. So I would pull that down. Overall, Korea is not a particularly exciting market to me at this moment. You want to look at your own country? Just let me know in the notes below, and I will try to do it if I have it. Have a great day.